We are actually in the middle of India's busiest airport. Uh, how is FY26 shaped up for India's biggest airport player? And it's been a year of disruption. So would you call FY26 as a year of consolidation?
So, no, thank you Vivek for having us over here and on to CNBC, so thank you for that. It is the busiest, it's also the largest, right? So, the current capacity of this airport is about 100 million passengers. Over the last 4 years, we expanded the capacity from 55 million to 100 million. And today what you see is the Terminal 1. This was the old terminal of Delhi Airport, which was at a point of time known as the Palam Airport. Okay. This whole thing was developed when the airport was fully operational. So it will give you a context as to how complex buildings and infrastructure comes up. This capacity of this new terminal is 40 million. So between this and Terminal 3 is also 40 million, and Terminal 2 is about 20 million. So 100 million passengers. And here we are growing at about 7 to 8%. This year has been, of course, the first quarter because of various geopolitical reasons.
Right.
There has been unfortunate mishap. Plus, the rains have been little more extended. True. So because of that, there has been a little bit of a dip in traffic, but it comes back, and we always use these opportunities to upgrade our infra.
Right.
So one of the runways over here, which we have upgraded to Cat 3, which will be beneficial during the winter time.
Right.
So all that benefit will come. Our busy season is yet to start, and the rainy season is usually a little low in business.
As expected, very seasonal in nature.
Yeah.
Well, the other important question that we want to understand is a lot of brokerages have started covering GMR Airport as a stock. There's been a lot of institutional interest that's come up ever since you've joined as well. And now, the first part is air traffic growth. That is seen as the kicker in terms of operating leverage benefits. What we want to understand is city sales, they see almost a 7 to 8% growth over the next 3 to 4 years as far as India's air traffic is concerned. Internally, are you more optimistic? Will you grow in line with the industry?
We are far more optimistic about it, and the reason is that we were facing ourselves capacity constraints at Delhi Airport for sure. Even Hyderabad. So Hyderabad was expanded from about 12 million passenger base, 18 million passenger base to 34. Right. So we ourselves were facing that capacity constraint. Despite that, we grew. Now that we have the capacity in place, I think the only thing that we really need to overcome, and I hope actually the airlines overcome, is the delivery of aircrafts. Right. So the latent demand is there. If the aircrafts get delivered, it will have some positive impact on pricing of tickets, and obviously that will have an impact on more growth. So we expect 8% to be a little bit more conservative. I think a double-digit growth is given.
Wow, that's a significant jump over what even very optimistic analysts on the street have penciled in. Well, that's not the only thing what the street is actually anticipating from GMR. So, for instance, Jeffrey very recently has come out with a note, and what they're saying is, don't look at GMR Airports as a pure play airport operator. In fact, they say look at GMR Airports as a diversified consumer retail business. Can you throw some more light on that? In fact, they say 90% of the total SOTP or 90% of the total share value actually comes in from the other businesses that you operate.
So I won't comment on his valuation thesis for sure, but this strategy is something which we articulated almost 18 months back, that we will concentrate as we go forward more on scaling up our non-aero businesses. And in that strategy, we've been able to now consolidate our non-aero businesses into the listco itself. We expect that non-aero will contribute almost 75 to 80% of our revenues going forward. Non-aero being less capital intensive gives an EBITDA margin of about 18 to 20%. So on the whole, my EBITDA margin may come down a little bit, but my cash flows will improve tremendously. And that is one area where now the rating agencies have also started to recognize.
Right.
So, airport business is where you have to spend first and wait for the traffic. So your debt balloons, right? Because the infrastructure has to come up first. So almost in Delhi we spent 14,000 crores and Hyderabad 5,000 odd crores. So, that on a consolidated debt has gone up. But Hyderabad today, we are again reaching our capacity levels and it is free cash positive, it's giving dividends to the listco. So the operating metrics are excellent over there. Delhi is going to happen soon, actually it's happening as we speak because the new tariff order has come in place which takes into account the capital expenditure which has already happened, the regulated asset base has gone up. So for our
I'm going to get more in depth because that's something that's very important. But before that, I just want to I want you to speak in depth about the kind of growth rate historically the non-airport businesses have seen. For instance, the retail part of the business, for instance, the cargo part of the business, even the other two lines of businesses that you run. Historically, double digit is something that you've mentioned.
Upper double digit.
So, talk to us about it a little bit more.
Yeah, so the most lucrative part of these businesses, the non-aero businesses, the duty-free business.
Right.
And it's a combination of growth of traffic.
Right.
Duty-free, obviously, it's a combination of international traffic as it starts to play more and more. From a growth perspective, Indians travel abroad a lot. Third is the disposable incomes of Indians are going up. It reflects in their consumer spends at our airport. And last but not the least, their preferences also now becoming more expensive and pricier. So a guy used to buy probably a red label, 5 years back is now purchasing a single malt. So, his expenditure or his spend is almost 30 to 40% more.
Right.
So it's a combination of all these factors that reflect in the duty-free business. Same goes with cargo. I mean, today we are a global major, and especially so a global major in the export of pharmaceuticals, in the export of what they call agri products, fresh, especially even going to Europe. The underbelly cargo has grown significantly. So I think we need to keep that into context as to where India is growing and how, as a transport hub, as a logistics hub, we can provide that platform for growth. So I expect these particular segments to grow. I think high double teens is still the guidance for me.
High double teens is a conservative guidance for you.
I said it's a guidance. I won't put it conservatively.
Understood. So we've spoken about air traffic growth. We've spoken about the non-aero part of the business. We've spoken about how you expect 8% to be the minimum compounded annual growth rate at which you expect passenger traffic to go ahead. Now let us come to the P&L, because that is something that the street is looking very closely, and most of our audience tracks the stock of GMR Airports very closely. Is FY26 the year GMR Airports turns profitable?
I hope so, and I expect so. The positive aspects in our business is because Delhi is a very disproportionate part of our balance sheet. Right. Delhi's yield per passenger was 140 rupees. With the new tariff order, my yield to passenger is about 360 rupees. So automatically, you multiply that with the volume, the numbers really go up. And that also reflects in many ways the rating agencies how they're looking at it. So I expect Delhi to really contribute to the consolidated profit of GMR Airport. Whether it will be positive or not, time shall tell, because we really don't guide the markets accordingly. But my expectation is, given the maths, I think we should be PAT positive.
Well, there's one very important clarification that we need from you before we let you go, and that is regarding the stake that one of India's biggest investors, or one of the biggest investors in India, that is GQG Partners, is concerned. GQG at the end of Q1 actually held close to a 6% stake in the company. There was chatter last week that they were trimming stake across quite a few of their Indian investments. Not sure whether you can comment on any specific investor, but we do understand that maybe they had sold some part of their stake in GMR Airport last week.
So I really can't comment on any specific investor, but all I can say is that in our many interactions with them over the last few months, their conviction level in GMR story remains strong, and I think once you verify the data at Bloomberg, I think that will clear the air about it.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.